Welcome to the latest episode of KapVista Klips. Today we are here with the Mindful Real Estate team. How are you guys?
Good.
We're doing great, Daniel.
Amazing. How are
Nice to
y'all?
see you.
Awesome. Thanks for jumping on. Now, I don't like to put in lengthy intros. I don't like to give a spiel because people don't want to hear from me. They want to hear from you. So I'm going to turn it over straight to you. I want to understand who you are, your backgrounds, your experience, how you get to this point. So, Matt, I'll throw it over to you. You start, and then we'll go around the room.
Thanks, Dan. I'm Matt Howitt. I'm the co-founder of Mindful Real Estate. My background is in high tech and e-commerce and then real estate. I grew up as a software engineer, product manager, head of engineering, head of product, working for a number of companies here in Austin, Texas, which is where I live. I did that for about 20 years. Worked for a number of companies that had successful exits. One of them was sold to Dell. Another was sold to IBM. I worked at IBM for a period of time. And then several other of the companies that I worked for went public. In 2018, I became a full-time entrepreneur when I started an e-commerce company called Profound Commerce. Its mission was to roll up other small e-commerce companies into a bigger platform. I did that for about 7 years. It's actually how I met Foley. He'll share that in a second. And then in 2024, we sold that company to another similar company, larger company that was doing something similar. And that around that time is when I also started Mindful Real Estate with Foley. So that's a little bit of background on me. Let me throw it over to Foley and Nick, and we can obviously dive in and talk more about ourselves, but trying to keep it short here.
Amazing.
Fantastic, Matt. Thank you. Appreciate it. My name is Foley Schmidt. I'm also a resident of Austin, Texas, and my background really starts post-college at Dartmouth. I went into investment banking for about 2.5 years at Lazard Middle Market. I worked in M&A, serving on both the consumer and tech groups, and also did a few industrial deals. And after 2.5 years doing that, I made a move to work for my mentor at the time as the chief of staff of a publicly traded barbecue company called Famous Dave's of America, which was about 500 million in system-wide sales. About 80% of those stores, 150, were franchised, and about 20% were corporate owned. I spent about 4 years in that position and also took on leading the marketing team at the same time before I decided to branch out with another partner and friend of mine named Dean Phillips, who briefly ran for president in the United States. And we started a cafe concept called Penny's Coffee. We grew that to 5 locations, and then COVID hit. And so started thinking about what I wanted to do next. And I had made some friends, mentors, and colleagues. And with 3 of those people, we raised a $60 million private equity fund under a firm called FBA Capital Management, where we acquired 6 e-commerce brands and invested in minority positions in some other e-commerce brands. And that was in the beginning of 2021. In July of 22, we sold those 6 brands to Matt's larger aggregator called Profound Commerce. And so through that M&A process, I had the opportunity to work on the opposite side of the table from Matt. And after doing investment banking and seeing what it's like fighting with the counterparty, I had a great experience. We really grew both our relationship professionally and our friendship. And so when Matt decided to acquire us, I decided that it would be great to continue my career as a partner of his, and I became his CFO at Profound Commerce until we sold that business for over $100 million in February of 2024. As we started working on Mindful and expanding our developer network, we met a number of people who we thought would be fantastic partners to our business on the equity side and invest in their projects all over the country. One of those people that we thought at the time would become that person was Nick Guidry. But Nick was just far above sort of the quality and sophistication of any type of person that we had met in the development space. And given our lack of backgrounds at the time in development, we thought bringing on Nick would supercharge our efforts at Mindful Real Estate, and it's certainly done so. And so I will pass the mic over to Nick.
Thanks for that intro, Foley. My name is Nick Guidry. I'm from Beaumont, Texas. Born and raised here, still live here. My career is not as traditional, I would say, as Matt and Foley. I graduated college in 2015. By the time I graduated college, I had actually performed a few real estate transactions on my own. And I looked at myself and decided that I was going to go full force with what I was doing. So over the next 10 years, I've built and scaled my own real estate portfolio. I manage about $15 million worth of assets that I wholly own myself, all the equity involved. So my career hasn't been as corporate, I would say, as Foley and Matt. However, I have a lot of experience in the operational side of real estate development.
Amazing, amazing. So I think you've all got incredible backgrounds and experience, and it all comes together and complements nicely. So tell me about Mindful. What is it? Why did you think that this is going to be your your next challenge, your next exciting opportunity?
Yes.
What about Mindful gets you excited?
Let me start. I'll tell you a little bit about its founding, and then some of the things we've done, and then maybe Foley or Nick can pick up from there. I would say, first of all, Mindful already is our exciting next thing. We've been doing it for almost 2 years now, and we've made a number of investments, first deal by deal, then we raised a small equity fund, and now we're working on other equity funds and also getting into lending. So this is very much what we are doing, the three of us together, and have been now doing for quite some time. So excited to be together working on that. The genesis of Mindful was really came in late 2023 when we were in the sale process for Profound Commerce. As Foley mentioned, that deal closed in February of 2024. For some reason, the acquiring company didn't need a second CEO or a second CFO. So pretty much Foley and I knew that we were toast the moment the transaction closed, which was fine. We were excited to go off and do something new, and that new thing turned out to be Mindful. Even prior to that, though, in the fall of 2023, while we were working through all of the deal mechanics and specifics of getting Profound Commerce sold to this other company, we started to think about what our next thing was. And I had always been interested in real estate, and as at Foley, and we decided that we would try to figure out something in that space. And we came to meet a few people spread around the country who were doing interesting things. And fortunately, as Foley and I both articulated, we had a pretty successful corporate career prior to that point. So we had our own capital that we could invest in some of those projects. And so we did that. Particularly one person who stands out in my mind in that period of time is this guy in Houston named Donovan Adesoro, who continues to be a partner to this day. Donovan builds duplexes in 2 zip codes in Houston. He's been very successful. He's also a young guy, a little bit younger than Nick, actually. He's 27 years old now, but when we met him, he was 25. And at that time, he had built from the ground up by himself with some investors, but helming the projects himself as the GP, something like 25 units. So something like 12 or 13 duplexes total. And his model was he buys the land, he oversees the construction. He's actually not the GC, he's just a developer. And then he sells the product, sells the project at the end, typically unleased. And then the person who buys it sometimes lives in it, which is sometimes referred to as house hacking, or rents both sides to prospective tenants and essentially an investor, owner, operator of that property. So we had the opportunity to invest with Donovan a couple of times in 2023. And as those investments proceeded, we were just really impressed with him, and we were really impressed with his model. And we started to ask ourselves, are there other folks out there who have a similar model? And we started meeting them. We started investing in them. And to some extent, the rest is history. But I will throw it to Foley to kind of fill in the details from there.
Absolutely. And I think, Matt, you hit the nail on the head, which is we started asking ourselves that question because we became sort of customer focused and customer obsessed, which is how do we find future customers all over the country? We thought that Donovan was not the only person in a market in the United States who was building houses, small single family or duplexes, that we could ultimately invest equity in. And so we really set out by going to real estate conferences, meeting people through the internet, getting referrals to find other people that were building this small duplex or small single family product in markets, some major markets, some tertiary markets, all across the United States. And really our model from the beginning was always to start small and start with our own money before we brought on any other investors who are also going to invest in these projects. And so before we met Nick, and Nick has, of course, written checks alongside us, but before we met Nick, we were first writing checks for a single deal with a single developer in a single market, having success and verifying that success before we continued to expand our investment with that specific developer on that project type and that market. And so if you look at what we've done over the last 24 months, including bringing on our newest partner, Nick, what we've also done is figured out about 15 markets around the United States where we have development relationships with those developers who solely specialize in building a certain type of product in their market that is both repeatable and scalable. And so at that point, what we thought was, well, if we can build and scale to 15 or 10 on the low end houses each year in each market with each of those development partners, we will have built a great business. And to tie this all together with lending, you have two types of investments, obviously, on the real estate side in development. One is for us to invest the equity needed to go get a construction loan, which is the second piece to be able to fill out the entire capital stack for one of these projects. And so when we look at someone like Donovan or one of the other developers in our development network, the opportunity with each of those individuals can be greater than 8 figures in a single year. And a portion of that, if you think about a 70 LTC loan for the people out there that will listen and really understand the loan product, that means on a $10 million investment that about 7 million of that is going to be debt and about 3 million of that is going to be equity. And so if we continue to grow the number of developers, quality developers in our network who get to that size, if we have 10 of them, that's a $100 million opportunity. And if we have 15 of them, that's a $150 million opportunity. But again, we have been obsessed with our customer, who is that developer, and being able to give them the types of financial products that they need to be successful in building that product that they do.
Yes, and I think that's really the key point. Just to sort of finish it off, which is, we are building this company, Mindful Real Estate, and we have this adjunct company, Mindful Lending, and our goal is to really be the capital provider for these operators across the spectrum of equity and debt. And so our equity fund is already, out there looking for equity investments. We've actually now made roughly 20 investments out of that equity fund over the last year. That we started raising at the end of November 2024 and finished raising in September of this year. And now what we're trying to do is add the complementary debt side of that so that we can both invest in the equity and lend across the cap stack. But it's not just to the operators we know today, it's to all the ones that we hope to develop in the future. And I'd love to talk about that a little bit at some point in this conversation. But Dan, I know you want to have a couple more questions here, so I want to throw it back to you.
No, I was just going to say that, you've spent the last, 24 months, proving the model, having success. You've got the track record now, and you're going forward, and now you're raising for the credit fund. But talk to me about the numbers. What does that look like? From an investor's point of view, what does that look like?
Yeah, sure. Let me start again, and then either Nick or Foley can jump in. So we're trying to raise a $25 million fund. And we believe, as Foley was starting to talk about sort of the capacity that we have with our existing developer network, and then I was starting to mention how we are, can talk more about how we're looking to acquire. So we don't think we'll have any issue deploying that 25 million over the next, call it 12 to 18 months. All of our partners are doing active work. They're constantly building new stuff, new projects, needing loans, needing equity. We're excited to be there. On that $25 million fund, we expect to pay an 8% preferred return quarterly. So like clockwork, if you will, whatever your share of the fund is, we will send you 8% of that, divided by 4, 8% annualized, I guess 2% quarterly. And you can, expect that from us. And in return, sort of on the flip side, we'll be lending that money to a couple of different kinds of projects. One, ground up construction. Two, rehab of existing structures, and 3, acquisition loans, another type of credit where you need to buy a property and own that property in order to do all of the pre-construction stuff that you do before you can go to construction, say, whether that's improvement, et cetera. So acquisition loans, often kind of called bridge loans, that typically live for a year or so and then are refinanced into a different kind of loan once you've set your strategy on the property. So those are three kinds of loans that we expect to make. We could talk more about our credit parameters, et cetera, if that is relevant, interesting to the audience. But that's the basics. You're investing in our fund. We're lending that money out. We're paying you an 8% return annualized on that money.
Amazing. Okay, great. Now, what are the markets? You've said you've got 10 to 15 different companies that you're working with, developers that you're working with. What are the markets they're looking at? To
Foley,
give
why don't you take
the
it?
audience.
Absolutely. So we have actually done projects across the entire United States. I should say the continental United States. We haven't gotten involved in Alaska or Hawaii quite yet, although I'm sure there are some people on this call that would love to be involved in Hawaii for various reasons. However, literally from the West Coast in California, both Northern and Southern California, Oakdale, California, and San Diego, California, all the way to Deptford, which is in New Jersey, and many places in between. We really like Texas as a market. Right now, we're invested in two separate markets within Texas. One is Houston, and the other is West, which is just about West, Texas, I should say, which is about 15 minutes north of Waco, Texas. Not to be confused with Western Texas, which is basically just a giant desert. Lots of stuff in the Midwest, including in Ohio. We also have a project in Kansas City that we've invested in. We also really like Indiana. We love sort of the re-onshoring of American manufacturing throughout the Midwest. You see a ton of that happening there. We go where the jobs are. We go where there's population growth and opportunity. We go where there's underserved new builds in that market, depending on product type. And we go where there is a large spread between build cost and sale price on a per square foot basis, where there is a great, reliable partner who can continue to deliver the same product at the same margins over and over and over. So while we're across the United States, what it really comes down to is the quality of that partner and their ability to produce the returns that we underwrite together at the beginning of that project.
And Nick,
that's what I was after.
Yeah, Nick, do you want to just talk about, I think we, fully reference this. We have big ambitions in Texas, particularly on lending. And one of the reasons for that is because of Nick and his incredible relationships across Texas. Nick, I know you don't like to brag, but can you talk about this a little bit? The folks
Yeah,
and the work you've done over the 12 or 15 years you've been in business to
absolutely.
meet so many folks. Go ahead.
Yeah, absolutely. For me, it's kind of interesting because I am the customer, right? Before before I agreed to join the team, I was the partner who was always looking for equity and debt products, right? At this point in stage of my career, I'd gotten to the point where I was able to take everything in a traditional sense. I can go get traditional loans from mid-level banking in my market and get everything done that way. But when I was younger and I was searching for capital, I was always calling, some people that I knew in my network and asking if they could, not necessarily on the equity side, but more on the debt side, right? One of my close mentors is a man named Greg Angel, based in Baytown, Texas. And, I've done a lot of business with Greg over the years on him actually writing me hard money loans for either construction projects or rehabs or fix and flips or whatever I was doing at the time. And before I had met Matt and Foley, our market had kind of taken a little dip. Interest rates went up, money tripled in cost. Everyone was kind of sitting around just wondering what we were doing. And I had kind of semi-retired, as best way to say it, was just kind of, pressing the buttons and moving around and doing what I wanted to do. And whenever I heard this idea to scale a business with people like myself, I just had to be a part of it, and the more we've gotten into the actual deployment of capital, I've really understood that the debt side
we seem to have I've lost him. He'll dial back in.
He was just
I mean,
getting so
one
much
one
good
thing I
momentum
should,
too. Oh, here he
yeah,
is.
for sure.
Out there.
Did you want to
Yeah, I was
just
just
Yeah.
going to say one thing I think that's really interesting about, meeting someone like Nick and then formulating, the thesis that we have around both equity, but primarily debt investing is that for the first time that I've seen, a developer is now building a lending product for developers, right? This is a for developer by developer product, which we think is really interesting for a number of reasons, but primarily it's because we've had the experience of getting construction loans from all sorts of institutions
Yes.
and high net worth individuals. And we think because of that we have a better mousetrap, right? At the end of the day, selling money, lending money, you're lending or selling a commodity. But there is sort of a unique angle that we have for a couple of reasons, primarily because we've been on the other side of that in terms of how we think about building that product. But the second is that if you look at the distribution funnel, which I think is really important, especially for the quality of loans that you're going to be the lender for. Ultimately, we've built a network of great developers whom we really understand the margins of their product. And if you understand a capital stack, where the first thing that happens when you sell a house is to pay back that debt, most lenders would spend 15 to 30 minutes going through a phone call with those individuals, but underwriting the project before making a decision. They plug it into, a template and they get a green yes or red no at the end, but they don't really do anything to understand that individual or that project. And we've spent tons of time with these developers in their markets because the barrier to invest on the equity side is so much higher than it is for most, a lender to invest against the construction loan on the project. And so we not only have we spent that time underwriting these quality individuals and their projects, but we really understand their margins. And so when a developer is making 30% cash on cash or 60% cash on their individual project, lending against that feels really good, especially because you sit higher on the cap stack. And so for us, I think building this product for developers by developers and also having that deep understanding of their projects is a really amazing sort of mousetrap from my perspective. And I think it's one of the reasons that we've had a ton of early success expanding our products from equity to equity and debt with the current developers in our network.
Yeah.
Okay, I'm not going to take up too much more of your time. I really like what you're doing. I think you've built a product, like you said, a product for developers by developers. So you understand the intricate details, you understand the projects themselves. You're not just putting it into a spreadsheet and getting a yes or no, which is a common problem faced by a lot of companies that are looking for lending, that the banks just don't understand the market that they're lending into. So
Totally agree.
You've built something for your customers. Now, you're not going out and asking people for money and not having that experience and not putting your own money in. So you've spent time, you put your own money in, you've tested what works and what hasn't worked, you've raised capital, you've proven yourself, and now you're raising a credit fund to complement what you're already doing, which
That's right.
is very, very interesting. So any investors who are watching this episode who want to find out more, please reach out to my team. We can connect you through to the Mindful team, and they can go through all the details with you and get into the nitty gritty, because I think this is a very exciting one. Thank you very much for jumping on, guys. It's been great to chat to you.
Thank you.
Dan,
Awesome.
thank you
Thanks
so
for
much.
having us, Daniel.
We really enjoyed it. Yeah, absolutely. Looking forward to chatting with investors.